Well, hello and a very warm welcome to this webinar, High Voltage Venture, Financing Europe's Gigafactory Ambitions, brought to you by Scope Ratings. My name's Keith Mullin and it's my pleasure to be your moderator today. And I'm absolutely delighted to have three esteemed speakers on the session today. So let me introduce you right away to Marton Zempleni from Scope's Project and Infrastructure Finance team, Guillaume Leprieur, Head of Structured Finance Office France at MUFG, and Yannick Chaffaud, Investment Director at Crédit Mutuel Impact. Gentlemen, welcome. Thanks for joining us today. Now, this session comes, of course, at a critical juncture as Europe actively seeks to scale up its gigafactory footprint and build a resilient EV supply chain. And this is not just a matter of industrial need, it's driven by strong political impetus at a time of heightened geopolitical turmoil, which has made the need to build and safeguard European economic sovereignty an urgent priority. As our speakers will discuss in a moment, when it comes to scaling up gigafactories, there are numerous factors and risks at play, which we'll try and cover. Now, rather than a series of presentations, we're going to run this as an interactive discussion between our speakers, covering some of the key aspects and challenges of gigafactory financing and investing and project risk management. We'd like to engage you, our viewers, in our conversation, so please feel free to type questions in as we go along, and at some point during the session we'll get to them and hopefully endeavour to give you some answers. One final thing from me before we get started, Marton did publish a research note on gigafactories earlier, perhaps in the summer, that will be available for download at the end of today's session. So that's it from me. Let's get straight into it. Before we do get into the discussion, perhaps Yannick and Guillaume, can I ask each of you just to give a thumbnail description of your role and your engagement with the Gigafactory story? Guillaume, do you want to start?
Sure. Good afternoon, everyone. So very pleased to be among you this afternoon. Marton, Keith, thank you for the invitation. Look, MUFG, for those who do not know, we are the largest Japanese bank. We are a very large financial institution, and project finance is really a core product of the bank. And among our project finance strategy, we've got a decarbonization transport strategy that is made of three pillars. Really, we want to be supporting our client across the entire value chain. And the first of this pillar is gigafactory. We then have the financing of e-fleet and then the financing of EV infrastructure. But really, the financing of gigafactory on a non-recourse or recourse basis has been, an area of focus for us for quite some time now. Given it's a developing sector and given it's a complex one, it's an area where we have made cautious steps in terms of deciding in which asset we can provide our support and ultimately deploy our balance sheet. And really, we've done that, as I said, on a recourse basis, but also in one occasion on a non-recourse basis. We have financed in France the Vercors project. And really, what has led us to conclude that this was a right project were three key factors for us. The first one, which has been core to our strategy for Gigafactory, is the fact that it's a really integrated project. It's a quasi extension of the supply chain of the OEM. Here in this case it's Renault. The second element is the strong sponsor group. The strength of the sponsor, but also the relationship pool aspect to it. And the final one is the support from the French government. it's a critical part of the French government reindustrialization strategy for the north of France with the so-called Battery Valley, and really these three elements made us ultimately decide to lend to the Vercors project, and really these three aspects have been not only in the context of Vercors, but at the core of the length in which we have looked at gigafactories financing.
Okay, thank you very much for that intro. And Yannick, could you talk very briefly about Crédit Mutuel impact, and then specifically what your role is there and how you come into this topic?
Yeah, of course. Thank you, Keith. And first of all, sorry, I would like also to thank you, Keith and Marton and Globally is cooperating to give me the opportunity to discuss and to speak on that topic, and maybe I hope so, to deliver some very interesting messages based on our recent experiences. I think, as you said, I'm currently, working on the investment, universe, or because I'm managing an infrastructure equity fund for Crédit Mutuel Impact, which is part of the Crédit Mutuel Group, a French banking group. But previously, I had various positions within infra and project financing, notably at SocGen, but more recently at La Banque Postale, because I was heading project finance team for almost 12 years. And during the last years, of course, we were as part of, the French public financial group at La Banque Postale. We were, closely working on gigafactories and mostly Vercors, but also ACC. So I think it was for us also very good experience. And I think the key point for that discussion today is the key point about, sovereignty, about automotive sector in Europe. And again, thank you for that, because I think Scope, as European rating agency, I think it's just the best partner to set up that discussion today.
Okay, good. Thank you for that, Yannick. So look, Marton, I talked at the very beginning just about the critical importance for Europe of trying to build sovereignty, economic security, defense, right across the piece. When it comes to gigafactories, this is clearly an issue. So look, could you talk, just to get us going, can you talk about the current ownership structure of gigafactories in Europe, and why particularly is it important to have European controlled facilities?
Sure, thank you, Keith, and also good afternoon to everybody listening into this webinar. Yeah, I mean, taking one step back, batteries make up 1/3 of the cost of an electric vehicle, and clearly, it's a question how quickly we get to a higher penetration of electric vehicles, but I think the direction of travel is clear. So, with that cost in mind, batteries are not just a technical component, but a major economic driver for the sector. And it's clear that if Europe wants a stable automotive industry, then it also needs a reliable access to battery production. And the stakes are very high for Europe because, whether or not someone likes cars, the automotive sector is very important for the continent. I have some numbers that the automotive industry directly employs around 2.5 million people across the EU. But if you include the wider supply chain, that number goes up to almost 14 million. That, just to give a feeling, represents around 6% of the total EU employment or 7% of GDP contribution. So it's a very significant sector for Europe when we talk about its competitiveness of how Europe can keep it alive and continue this economic contribution. So, if we created just a map, just to talk through how the landscape looks like, which I'm trying to share very quickly with you. This is not a fully comprehensive map, just to give an idea about the locations and the size of the major gigafactories in Europe. The ones shown in the map are either plants which are in operation or under construction, so kind of ignoring the plants which only exist on drawing board, because there are a lot of them. The red bars demonstrate plants which have Asian ownership, and you can definitely observe an Asian dominance in Europe. Asian ownership means either in practice Korean or Chinese ownership. And there has been an interesting trend because historically Koreans have been dominating this landscape in Europe. Koreans, maybe going back 5 years ago, had 70% market share, but the Chinese companies have started to take over, gaining ground very rapidly. And now the Korean market share is down to 50%. So Chinese companies like CATL is definitely expanding. So if you look at all the capacity in this map, currently the factories which are in operation can probably provide something between 1/2 and 2/3 of the battery capacity requirement, which directly go into the production of car manufacturing in Europe. And that number, with the facilities in construction, are expected to grow. So that's great, and it's important to have production in Europe and close to the automotive production centers. But then, and what we also expressed in our report, and where this whole discussion was coming from, there is this underlying question that is production sufficient in terms of location? Is it enough just to assemble the batteries in Europe? Or whether Europe also needs European controlled gigafactories? And we strongly believe the answer is yes, because if for Europe doesn't have, if Europe don't control their own battery production, then Europe is exposed to decisions made in Korea or China, and whether these decisions are commercial or political ones. And it also means that if the ownership and decision making is not in the continent, then the R&D, the know-how, and the design also stays outside of Europe. So we as Europe lose not just autonomy, but also will be left behind in innovation and also lose out on value creation. So that's why I think some of the Western automakers like Volkswagen, Stellantis, Renault, participated in projects directly or indirectly, typically near their car manufacturing facilities, to support the creation of European battery projects. But these projects cost a lot of money. If you take a decent size facility of more than 10 gigawatt-hour, they cost well over 1 billion euro. And the question is where that money comes from. It can come either from direct corporate financing, but then clearly the budgets of automakers are limited, or as both Yannick and Guillaume already alluded to, there have been examples on the market to raise non-recourse financing. Of course, that comes with multiple challenges.
Yes, indeed. And so, I mean, there are lots of challenges. I think it will take us quite a while to get through them all, but we'll touch on some of those. So, look, given all of that, Yannick, these are not simple projects to plan, build, and move into operation. How would you summarize perhaps the current sentiment around financing these projects? I guess we're talking about non-recourse here, but yeah.
Yeah, no, for sure, Keith. And going forward with what Marton said just before, I think I would say 3 words. I think original, complex, and long. Original, why? Because I think, as Marton said, I think historically, most of the gigafactory were, let's say, financed on balance sheet by, let's say, batteries pure player, Asian player, notably. So I think it was pretty clear in the market. But more recently, I think there was a wave of new financing, external financing, and projects driven or promoted by European automakers, as Guillaume said previously. So I think it is clearly an original, let's say, wave of financing. Complex. Why complex? Because obviously, I think for such, let's say, industrial project where you have an extensive list of stakeholders involved, suppliers, and the raw material suppliers included, off-takers, multiple financing parties, including public, and not when I'm saying public, I'm talking about national, but also European financial institutions. So, and on top of that, you have also to face very difficult choices in terms of technology and chemistries, and we probably discuss it later. And finally, long-lasting process. I think the complexity I mentioned before led obviously to a very long-lasting process for such financing, because as Marton said, the primary idea behind those, let's say, new financing was to achieve non-recourse financing for projects. So, and of course, the idea for stakeholders, so of course lenders, but also investors, just to know if we are able to build up, let's say, project financing for such, let's say, for such project. And second, let's say, second reason why we face such long-lasting processes, the fact that, of course, to involve and to align public financing institution with private stakeholders is always a challenge for everyone. So I think that's why I think it was definitely a very long-lasting process.
Guillaume, can you pick up on this topic about financing sentiment? You mentioned at the beginning, you referenced, you know, you've done some on the books, one non-recourse. What are the kind of key topic, the key thoughts that go through your mind or the bank's mind when it comes to financing these projects? And can I just also reference, and perhaps you can factor this into your answer as well. We did see the bankruptcy of Northvolt, which was obviously widely covered. I was wondering how that also was, whether that was still playing into the risk appetite.
Sure. I mean, as I said in intro, you know, for non-recourse financing, for the reason, you know, mentioned by Yannick, banks were cautious when it was coming to consider financing such industrial project on a non-recourse basis. And it's fair to say that on the back of Northvolt bankruptcy, banks are even more cautious. The challenge with this industrial type of a project remain, you know, the building and the ramp up of the gigafactory. And Northvolt has been a good demonstration of the challenge at stake, and really, I think that, you know, when it comes to non-recourse financing, until the first wave of projects that have been financed in France are demonstrating, you know, an ability and the capacity to get beyond the ramp-up phase, you know, demonstrate, you know, good yield in terms of production. It's going to be very challenging for a project as of today, you know, to raise, you know, $1 billion plus or even several billions of banks' liquidity on a non-recourse basis. So I think there is a bit of a wait and see mode right now when it comes to this sort of financing.
Yeah, that makes sense. Look, and Marton, just perhaps breaking it down into the key risks that gigafactories investors are actually facing. I mean, it's, you know, caution is understandable given what's happened and given where we are in this political and cycle as well. But what are the key risks? Can you just enumerate some key risks?
Yes, I would very much confirm what Guillaume has said, that we also see there are a number of risks, but probably I would put on the number one position for gigafactory financing and the risk lenders and investors take, the risk of construction and ramp up. And such risk for construction period are much greater than non-recourse lenders typically see on other type of classic project finance transactions, because getting the building up, installing the equipment, and reaching physical completion may sound like the hard part, but that's just only the beginning. The real challenge really starts afterwards. We have again, just let me share quickly for visuality help, a chart which illustrates a little bit the process where, you know, the gigafactory goes through physical completion, but then after that, what happens, you have all these very complex equipment and you need to coordinate the complex production process where multiple systems and machines have to work together seamlessly. And there are different steps in battery making and potentially thousands of integrated machines, very complex control systems. And by definition, you have a new workforce in a new factory with limited experience. And one of the key things one has to understand in the production of batteries that through this very delicate and complicated and multi-layered production process, the single tiniest mistakes ends up in defective product or called scrap. Even a small piece of dust in the coating means scrap, and effectively that means loss of money because all the input materials and variable cost goes to the bin. So what the red curve shows here when production starts, the yield, which Guillaume also referred to, which represents the portion of the products which meet certain quality standards, that goes up. But it takes deep expertise to climb up that curve. And during this period, until at least that level is achieved where variable cost can be covered, it's effectively a loss-making venture, and investors are basically burning cash. That's why sometimes it's also referred to as the valley of death. And really the big question for investors and the big risk for lenders, how long this period lasts, how long you are not just not making money, but actually burning cash. And Northvolt, as Guillaume mentioned, was a primary example because Northvolt really did fail during the ramp-up phase. It couldn't deliver the products in the quantity and quality to BMW, who pulled out. But we've experienced ramp-up issues elsewhere. Even Tesla, when they first set up their first Nevada factory, they also had huge problems and delays with the ramp-up phase. So really, we see this as a number one risk of gigafactory financing.
Indeed. And Yannick, can you follow on from that, from your perspective, sitting where you are today?
Yeah, for sure. I think on my side, I think I fully agree with what Marton and Guillaume said before. I think just to keep in mind, when you are dealing with automotive sector, and especially as a key supplier, as battery manufacturer, of course, you have to produce good quality product and in mass. So, and of course, you have to achieve, let's say, the cheapest cost per battery because it's a highly competitive sector. So I think at the end, and I think I subscribe to what Marton said just before, I think it's a key element to survive. And I think Northvolt example was a clear example. I think we can go to death with this within that sector. So clearly, at the end of the day, the main risk remains ramp up and also to produce mass, let's say, product with higher quality. So it's a real challenge, and also because and the chart from Marton regarding the various, let's say, facilities across Europe was quite explicit. I think you have a lot of competition, a lot of capacities installed. So of course, when you are financing such project, you have to be sure that, you have, let's say, a management which is clearly dedicated to produce very, very good quality.
No, indeed, absolutely. And then, look, Guillaume, as a lender, you're looking at, I guess, the same type of risks as other participants looking to finance this sector. How can lenders mitigate some of those risks? And do you need to? Do you need to other trade-offs in the process?
Yeah, you have to make trade-off. Look, Keith, beyond the obvious, level of contingencies and offtake agreement, which are, a must-have. There needs, for the contingency, there needs to be size, according to the risk of the project and the gigafactory. And the offtake agreement is here to, obviously mitigate, the risk of demand and price, and which is a must for, considering financing a project of this nature. There are several aspects which we as lender would focus, in the context of a project of this nature, and they go beyond I would say the plain vanilla, non-recourse, risk and mitigants that you typically look. I mean, it starts with a strong focus on the management capabilities. Is the management team experienced in working in an industrial and factory environment? That's the first question. Is the management team, really focused in delivering, a baseline production with yield? What is the management strategy on that front? And what is the overall management strategy? We've seen in the case of Northvolt, I think there have been many forum where the fact that Northvolt had diversified, both horizontally and vertically as caused some issue. I think that's one aspect that where banks certainly would be focusing. So management is one. Second, I think it's people and competencies. It's true that the equipment is key, but to face the valley of death, it's also key to have from day one, as soon as you enter production, to have fully trained people that are there, and it's really important to have the ability to recruit these people with the right expertise. So access to quality workforce is another key, due diligence and mitigant aspect. Then moving on, I think be in a position to justify a de-risking of the ramp-up phase is really important. And it comes through, in my view, a few things. One, the flexibility that you've got in your offtake agreement to maneuver within this ramp-up phase. The track record that you can get from having a pilot line, a quasi replica of the gigafactory, although at a smaller scale, but whereby you have gone through not only the design phase, but the production phase at scale, to demonstrate that you've got the right spec, that you are in a position to produce this spec that is in accordance with the offtake requirement, at the right yield. So these aspects, I think, certainly, mitigate the risk that Marton was alluded to.
Yeah. Okay, thanks. One of the topics I guess I wanted to bring up. So when we talk about electric vehicles and batteries, we talk about them quite often as if there's just one type. Because when it comes to batteries, there are different types of electric batteries, and within the broader context of it's not just where is demand for EVs going, it's where is demand for particular kinds of electric batteries going. So no, we're not scientists here on the call, but look, I think that there's a big debate about whether these NMC, nickel, manganese, cobalt, or LFP, lithium iron phosphate type of batteries, which one is going to increase in where are we going to see the perhaps bigger demand? Again, I don't know how comfortable you are talking about the battery types and demand where it's going, but it does seem to have become a fairly vibrant topic for conversation. I don't know, Martin, do you want to kick off with any kind of thoughts about that, and perhaps we can go to Yannick and Guillaume. Yeah, Martin.
Yes, sorry, had some technical problems.
Yeah. So no, I was just wondering if this battery type NMC versus LFP, and other types of, and potentially new types of batteries, is that a risk factor that is easy to model into when you're looking at risk in projects?
Yeah, I mean, I think it's especially if you look at long term, it's a big issue. Probably short to medium term, there is sufficient visibility, but it's very difficult to say longer term what will be the winning technology, whether it's NMC, LFP, or something else, sodium or solid state, because it is influenced by manufacturers, customer preferences, automobile factory strategies, even the relative price of raw materials, the technological evolution. And it's all of these factors are very, very difficult to predict. And the problem is that, there is this question about NMC or LFP, which technology will be used. And this comes on the top of another uncertainty, which is the question about aggregate demand. Because if you look back a couple of years ago, with the benefit of hindsight, there were lots of market projections, how EV penetration will go up, and none of them has really materialized. I think those were overly optimistic. So you have two different layers of uncertainties, which means that for funders and developers of gigafactories, they need certainty that if they finance these products, then the end product can be ultimately sold and the cars can be sold. And I think it kind of refers back to an earlier comment made by Guillaume about the importance of off-taker agreements, that it's very difficult to bank those uncertainties. So any bankable deal really requires some sort of an off-take agreement mechanism, at least to underpin the output to a minimum level, which gives some minimum visibility to lenders. So I think without that, exactly these are the uncertainties which makes financing very, very challenging.
Yeah, Yannick, do you want to comment on this again?
Yeah, for sure.
Risk factors, but on this issue of the risk of financing the wrong product.
Yeah, it's a technical debate, and it's still ongoing. So I just for sure won't give you a clear answer to that point. But just what Martin said, I think the point is, and Guillaume, let's say, mentioned the offtake agreement importance. I think the key point, and just to be very close to the automaker, which is generally sponsoring or very close to the project, and just to be sure that the chemistry and the battery, I think
I think we may have lost Yannick for a second. Perhaps Yannick, if you can still hear us, perhaps you can dial back in again. Certainly from my screen, he seems to have frozen. No, we've lost him. Is that me, Martin? Is Yannick frozen on your side as well?
Yes, he is frozen on my side.
Okay, fine. All right, perhaps we can move on, but perhaps we'll come back to Yannick if he's able to come back. But it's been we've touched on some European sponsors, and I was curious to understand, perhaps from their perspective, what long-term challenges do European sponsors operating independently from established Asian players face? Perhaps a bit of a leap from what we were talking about, but Martin, was this covered in your research paper?
Yes, I think it's also important to talk about that. Although in the discussion we have been focusing on the importance of having European-owned and controlled, and the challenges around that battery manufacturing facilities, I think we have to understand, sadly, that this is only one piece of a much larger jigsaw puzzle, because what's behind it, the broader supply chain, and especially the upstream part of the supply chain, i.e. the input materials which go into battery manufacturing, is still very not European and very heavily dominated by China. There is a chart which again I would like to share for an easier demonstration here with the audience, just to, in a very simplified manner, to demonstrate the concept. Because we look at the supply chain and break it down into three pieces. The first one is raw material extraction or mining, and you can show, for each of the major components of an NMC battery, what are the key producing countries, and we focus on NMC here because that's, as we discussed, is the most relevant right now for Europe. And the second layer is the treatment and processing, where you effectively process the raw materials into the required high purity to achieve battery grade materials, and also to create so-called kind of metal sulfates typically. And the last step is the active material production, which is the direct input into the battery production, which means the creation of certain composite materials. And what you can see that, especially in this chart, the processing and the active material production parts are very heavily dominated by China. And this dominance can either be very direct, where the facilities are mainland Chinese located companies, but even in some other instances where it's not the case, China still tends to have a very significant dominance, and a good example for that is nickel processing, where most of the processing facilities are located in Indonesia, close to the mines, but actually those companies are controlled and owned by Chinese entities. And I would just to highlight one specific point for attention, and that is the anode part, which for both NMC and LFP, so there is no difference, is graphite based. And it doesn't necessarily represent a huge part of the overall cost base for a battery. The anode is typically less than 10% of the total variable cost for a battery, but still you can't make a battery without an anode. And graphite and anode active material production is more than 90% controlled by China across the whole value chain. And there are some European initiatives to create some local production, especially in Scandinavia. You have some examples in Norway and Sweden, but in terms of scale, they are very small. They definitely can't supply sufficient size graphite production to European battery manufacturing. So I think this chart just tries to demonstrate that there is a very significant vulnerability right now in the supply chain.
Yeah, indeed. Okay, thanks, Martin. Yannick, you're back. So we lost you for a second. So I don't know if you remember what we were talking just before we just moved on to the question about the challenges that European sponsors operating independently from established Asian players face. But you were talking perhaps about just finish off. I don't know if you want to finish off your comments about the comment about battery types, or perhaps move on to the European sponsors. Feel free.
Yeah. No, for sure. I apologize for the technical issue. And maybe and just go back to what Marton said about supply chain and Chinese or Asian, let's say, players or countries' dominance. I think it's not a debate anymore. I think it's purely an assumption for the automotive sector. I think for the next probably 5-10 years, I think for me it's not a debate. There's no way to change the reality in the short term. But I think for me it's not a real risk, because I think at that time, I suppose that most of the Asian countries, let's say, they will need some, let's say, to maintain their exports as much as possible. I think if we, for instance, are looking at the US market perspective and the trends, I think, of course, Europe can keep, let's say, very good and stable relationship with Chinese and Asian players. So I think for me, the supply chain, which is dominated by Chinese and Asian, let's say, players, it's a big deal at that time. And it's a reality. So I think, of course, we can have a philosophical debate on that, but I think that's a reality. So we have to maybe to deal with that reality. I think probably the issue is for, say, more globally, the automotive sector just to remain very competitive. And therefore, it will be also a big challenge for one of their supplier battery manufacturers. And of course, I think we will also already mentioned, let's say, keeping control over pricing quality, but also working very close and maintaining strong ties with the automakers on the long term, which is key for sure. And finally, and talking about more politics, I think the main issue in the long term, and just to be sure that automakers, battery manufacturers are trying to push EU decision maker and also national decision maker to protect the European market as far as we can. I think we did it in the past. If you remember, during the 90s, I guess it was when Japanese, let's say, car makers were, let's say, really powerful in Europe, but we finally succeeded to put some very strict constraint and to protect our let's say European market. I think that's a key point today. And just instead of trying to change the supply chain, which is again very difficult, I think we have to put some very strict and favorable, let's say, constraint and framework just to protect our industry in the long term. That's my view on that.
Yes, interesting. I mean, obviously, protectionism has become a byword of today's geopolitics. Guillaume, let's assume that where we are, and next 5 to 10 years, it's very difficult to escape the Asian influence in the battery manufacturing. But perhaps I can ask you to look maybe beyond that. So, assuming that we're going to continue living in a protectionist kind of world, do you see any prospect of European companies innovating in the production and manufacture of electric batteries, whether that be design, chemistry? I mean, do you see perhaps longer term that there's an opportunity for Europe to kind of break free of this Asian dominance? And I say that just conscious that you work for a Japanese bank, but
yeah, I mean, I'm not sure the two are linked. Look, innovation is key, and I think it's highly linked to the sovereignty, feature or aspect that we were discussing in the first place. Be it further development, of the lithium ion batteries, or moving towards solid material batteries. I think we are only at the start of the journey, and there is not a day where we are not being made aware of a new announcement, be it a new technology whereby you are going to be in a position to fill your battery in the space of a couple of minutes for with a range of more than 1,000 kilometers and more. Innovation for sure is going to be key long term, to be in a position to be relevant when it comes to electrification of the transport sector. Now, in the short term, I think making the link with the choice of the technology, the geopolitical, the regulatory framework, the protectionism, these are very complex topics with which we as bankers have on which we have little to no control, and the project that we are financing in the first place, in the medium term, their control is limited beyond the lobbying aspects to it. So when it comes to bankability, you are down to the necessity of having a strong offtake agreement with a strong credit-worthy party to make a project bankable. The rest is, when it comes to bankability of a project, it's important. We look at it. We look at commercial DD, but the core of a bankable project comes down to the offtake agreement, and also the core integration and the close proximity between the supplier, i.e. the gigafactory, and the OEM.
Absolutely. Yannick, anything specific to add to the bankability topic?
No, I think Guillaume is right, and just by seeing that, of course, it's very difficult to let's say to anticipate and geopolitical evolution and trend in the future. Of course, we can have some debates, but yeah, I think the key is just when you are doing project financing or when you are setting up non-recourse financing, it's always key to go back to basics principle of project financing. That's key. But maybe just one point regarding creditworthiness. I think just also to keep in mind that in the sector, I think, of course, you have investment grade counterparties, but it's not majority of, let's say, automakers or off-takers. So of course, clearly that's a risky, let's say, sector at the end. And finally, risky financing or investment. So we have to keep in mind that.
Yeah, no, indeed. Actually, we got a question just coming just a few minutes ago. Actually, I just wanted to push out there, which is because we haven't talked about energy at all during the conversation, and the question really is asking how much energy is needed for a single gigafactory, and where does it come from? You know, is there an excess or enough energy in Europe for these needs, and also taking into account the future gigafactory footprint. This is going to be a topic as well. Yeah, it's thrown out to any of you have any sense of the energy requirements in terms of a number? If not, we can certainly circle back to our questioner. But anyone want to throw out some thoughts about energy needs, energy requirements, and supply?
Yeah, for sure. Maybe if I can start on that. Of course, I think it just you need, let's say, a lot of energy to run your production lines and to produce, let's say, on a 24-hour basis your batteries. So of course you need, let's say, a very favorable environment with, let's say, cheap energy with a good supply, and so yeah. So basically, for me that's another question, the question of where you are putting your factories. So that's why I think the recent way was in France, because of course, as you know, in France we have a very cheap and let's say very abundant energy through, let's say, the nuclear power plants mostly. So I think just it's a key point. It's a key point in the management decision to know where you can locate your factories. And I think Europe, and especially France, remains a pretty good place to do so.
Yeah, indeed. Any brief final thoughts on the energy supply, Guillaume?
No, I mean, I wouldn't dare to mention a figure in terms of energy consumption per probably I would get it wrong, but indeed it's the location. Location is an important factor. Access to electricity, access to water, access to heat. Are three elements that are really important when it comes to deciding as to whether a location is a good one for a gigafactory.
Yeah. Okay, look, I think we probably need to close the session in a couple of minutes, but I just I think it's been a fascinating discussion, and clearly you brought up lots of challenges and risks, but on the basis that there's certainly an expectation, or a political expectation, desire for EVs to evolve in the mix of cars in Europe. This topic is not going to go away, and in other words, the bankability, financeability. So before we close, and I'll ask perhaps Martin to give us a couple of final thoughts, but Yannick and Guillaume as financiers to this, I mean, on a sort of a how comfortable or confident are you that some of the topics we've talked about today in terms of challenges can be overcome, and how looking ahead, do you stand ready to put your money into this critical sector?
No, It's a good question. Maybe we would need to set up another webinar to answer to that question in the next years. In the meantime, as Guillaume said, I think we have to digest, let's say, the current, wave of financing, just to know if finally factories will deliver their promises. I think that's my view. And I would say, fortunately or unfortunately, at that time, and due to the current environment and notably European growth, I think the trend for, let's say, more EV cars is slowing because of the growth. So I think it lets us some time to digest and to look back to the investment and to know if finally it's a good investment or not. I think that the time is key in that movement.
Yeah. Indeed. So, look, Martin, do you want to give a couple of just literally closing sentences about where you see this going? And I guess you've been quite active looking at some of these projects as well. So, what are your final thoughts?
Yes, I think the challenge is high, as we discussed, both in terms of risk profile and just the sheer capital needed to really stay in the game for Europe for gigafactories. And I really believe the players are making good progress, the auto manufacturers and investors. But probably I would say, in my personal opinion, that there would be a need for more national or EU level support, because in this space, we are not really competing Germany versus Spain or France, competing against China and US, and the support level are multiple times. Even the US IRA support is probably 10 times of what Europe is ultimately willing to provide, and Chinese numbers can be even higher. So without some support, I don't think there is necessarily sufficient private capital to finance the scale needed. Maybe what is there on the table and what banks are willing to provide, that's limited. As Guillaume and Yannick explains, there is a certain risk tolerance for banks to participate in these pilot projects. That's maybe enough to stay in the game. That's still very important, but I think that there needs to be more national government level and EU level support to really make progress in this space. Without that, I'm a little bit skeptical.
Yeah. Okay. Let me close the session there. We'll finish on a skeptical note. I think that's probably quite suitable given the risks and challenges that we've been discussing. So I said at the beginning that you could download Martin's paper on gigafactory financing. So there, by magic, click on the download now button and have a read. It's definitely worth reading. So let me thank Guillaume, Yannick, and Martin for coming on today and discussing this topic. It's a vast topic, complex topic, as we've discussed. And I think if any certainty in life, I think one certainty is that we'll come back and discuss this topic at a later point to see where we've got to. In the meantime, thank you to you, our viewer, for dialing in and for watching. I hope we covered the points that you found interesting, and hope that our responses were satisfactory. If you have any further questions, please feel free to follow up with myself or Martin, and we will certainly get in touch with Guillaume and Yannick if you need them to respond to anything specific. So that's it from us. Good luck out there. We live in difficult times, but let's all live in hope. Have a fun rest of the afternoon, and we'll see you next time. So it's goodbye from us.
Thank you. Bye.